Hey trader, Richard here from Ola Prime. Unfortunately, we've noticed that you recently breached your maximum daily loss limit in your account. Now, that's taken from your previous day's closing balance. Now, whether that's 3% or 5%, depending on the challenge that you've partaken in, it is unfortunately a hard breach, meaning that you'll have to retake another challenge. Now, although this might be very frustrating, the purpose of this video is to show you one of the top reasons for this happening in the first place. Now you can try to avoid this from happening again. One of the reasons that this does occur is when traders trade during important economic news events. Now, a lot of these challenges you are allowed to do that with Hola Prime, which is perfectly fine. It's really up to you. Obviously, it's very important to try to manage that risk, and this is where this video comes in. A technique that traders use to minimize that amount of risk, especially if they're trading Forex, for example, is to hedge their open positions to sustain temporary volatility. And that's the purpose or the topic of this video. Just a technique that I would like to show you that you might want to use next time you trade to try to avoid from reaching the 3 or 5% daily loss limit in one trade, or potentially a couple of trades or 3 trades on one single day. Right, quickly, I'm going to switch here over to the MatchTrader platform. It should be coming up on screen right now. And I'm just using this platform to visually show you two highly correlated markets. The pound US dollar and euro US dollar. You can use the Aussie dollar, Kiwi dollar, for example. But the point being here is, if you're hedging, what does that actually mean? Now, in this example, let's say, for example, you were going to trade in the pound US dollar. You kept your eyes on the economic calendar on that day, and you've already got an open position. Let's say you're swing trading, right? And there's a Bank of England news event coming out. Now, you know that that news event might influence the pound US dollar more than the euro US dollar, because these are two highly correlated markets. Then you might want to actually, because you're long on the pound US dollar, consider taking a short position or doing exactly the opposite on the euro US dollar, for example, meaning that you're hedging your position. So let's say, for example, pound US dollar does move violently downwards in the opposite direction from your trade. In this case, let's say you were trading to the upside or you were long, and it does move against you. In a very quick move like this, for example, you could, depending on how much lots you were trading, very easily reach that maximum daily loss limit in one single trade. But if you, for example, although you anticipated this, you knew that that news event's coming out, you expected increased volatility, you then took the opposite trade on the euro US dollar. Again, it's a different currency pair, but they're highly correlated. What I mean by correlation, I just want to use this compare function, and let's pull up the euro US dollar. Right, so, oops, let me just do that again. There we go. So correlation means is that you're basically having two different markets or instruments that are highly correlated, that they pretty much move almost exactly in the same direction. They swing highs and lows almost exactly occur at the same time. Not 100% all the time, but in majority of the cases, although they're different markets. You also get uncorrelated currency pairs, or markets that, they just move opposite from each other, but also their swings and highs, or highs and lows, also occur around about the same time. But just, if this one makes a high, the other one tends to make a low, etc., etc. All right, but because these markets, in this case, they work really well for hedging, that are highly correlated, like the pound US dollar, euro US dollar, you can then, for just knowing this, take the opposite trade in the other currency pair, just to soften that blow, so you don't, let's say, increase the risk of you keeping your trade open during a volatile news event, for example. Now, here we can clearly see, let's say you were long the pound US dollar here somewhere, and you knew about the news event and you expected maybe, I should be a bit more careful here. Something was going to happen. Don't worry now about the timestamp here or anything like that. It's just an example, right? I don't even know what happened on this particular day. But if you were long the pound US dollar here, that decline on a 1 hour time frame is like 73 pips. That's quite substantial, right? Now, obviously, if you were leveraged, trading with a certain amount of lot size, that will obviously be magnified and you could potentially reach your maximum daily loss limit in one go. All right. So if you were long the pound US dollar, let's say an hour or so before, you could have potentially gone short the euro US dollar. So doing, or just before the news event gets released, so that when, let's say, the pound US dollar does come off, the euro US dollar would also follow suit. But because you're long the one, short the other one, they're not 100% canceling each other out, but it's actually reducing the amount of risk or the loss you would have taken if you just held the pound US dollar trade open. All right. So again, I mentioned other highly correlated market: Australian dollar, New Zealand dollar. If you trade the indices, like I like to trade the Nasdaq and the ES, for example, or the SPX 500, CFDs on the future side, depending what you want to trade, they're also highly correlated. Right. So, just a quick example or technique that you might want to use during your next challenge. I hope this helps. Obviously, always keep an eye on that economic calendar and never trade with too much risk on any given trade. And if you do expect something to potentially go against you, maybe employ this hedging technique to sustain the temporary volatility. Anyway, thanks very much for watching. I hope you have a fantastic rest of your day and good luck with your next trading challenge. Until next time, take care and goodbye.